Hey folks, welcome to 9 to 5 to Freedom. In today's video, we're going to review YMAG from yieldmax versus XDTE from roundhill. Which one of these funds makes more sense to invest if you're looking for a high yield performer? Now, if you're new to this channel, my name is Alex. On this channel, I track my high yield portfolio that I'm building that will one day replace my 9 to 5. So glad you found this channel. In this channel, I also talk about my career. I talk about investing in real estate, stock market, and just sharing some other things that I'm doing. Hopefully this inspires you to learn and discover ways that you can eventually leave that 9 to 5. Okay, without further ado, I want to compare YMAG from yieldmax with XDTE. Now, these aren't apples to apples, so why am I comparing, you might say? Well, let me just show you for those of you who are new. This is my portfolio that I'm building and testing out for a few months until I'm putting a sizable amount of money into them. I'm utilizing different types of funds, tracking their performance, and I'm doing weekly reviews on how they're doing and reacting to the market. There are lots of high yield dividend ETFs out there, so which ones make sense to invest in? So this is my position here in YMAG in my portfolio. As you can see, we have roughly a little bit under $3,000 position here, 166 shares, and the current dividend yield for the year is set to 42.5%, which sounds very, very impressive. And then the other one we're talking about here today, obviously, is the one from roundhill, XDTE. Now this one I have a smaller position in, about 1750, 35.6 shares, and we have a more modest yield of 24.75%. All right, so I've been tracking these, their performance, how they're doing, and you know, it's only been 2 months. It's very hard to say. I just made another video. Can't really show you because I'm about to get my dividend payouts. So on Friday, we'll have a better idea. But if you look at my previous videos, I covered the performance I'm getting so far. What's nice about both of these funds is that they both pay out weekly, as opposed to some other funds that are either monthly or quarterly. So it's nice to see that dividends are being deposited. But which one makes sense? So I want to go through a few of them here. So this is YMAG from yieldmax. Distribution rate set to 40.24% for this year. Now, what does this fund consist of? Well, it's the Magnificent Seven. We got Apple, Amazon, Google, Facebook, Microsoft, Nvidia, and Tesla. These are some of the most largest performers that we had in 2024 and moving into 2025 as we have our AI boom. So as you can see, they're sharing here all of the distributions they had last year. And they have net assets here, $352 million in net assets. And of course, they want their expense ratio to be pretty high here, folks, 1.28%. So they're tacking on a management fee on top of the acquired funds fees. So pretty hefty, pretty high maintenance fee that you're paying here, okay? Now, why am I comparing this to XDT? Well, because this is a weekly payer, and roundhill and yieldmax have been going at it, and they have been making some interesting high dividend yielders. And from roundhill, we have XDT, which tracks the S&P 500. And this does the 0 day to expiration covered call strategy ETF. Okay, so here they're saying they have a distribution rate of 26.4%, so roughly about 14% difference. Now, like I said, this is the S&P 500, so obviously you have a lot more exposure than you have in the YieldMax one with only 7 companies in there. So distribution wise, let's see here. Well, let's go through what they're charging. So this is again weekly payer. No, I don't want to stay informed. And so they're charging 0.95%, so slightly smaller expense ratio, which is good. Now, one thing to consider, and this is the tax implication. Again, shout out to Oracle. He covered this, and like I said, I've been talking about this my last video, this video. This is something to keep in mind, is that with XDTE, you're actually getting your capital investment as a way of the dividend. So you're not actually going to be taxed on that initial amount that you're investing on, that you're going to be paid back in dividends, which is great when you're starting out. Whereas with YieldMax, these cats, they're giving you a portion of it as your initial distribution, and then the rest of it comes out as income. Okay, so I pulled this out from their website, and this is for let's see here, for YMAG. Okay, so for the YMAG ticker, this is the Magnificent 7. Estimated net investment income, okay, that's our 66%. Now, percent of cumulative distribution for fiscal year. So this is what's important here. Estimated return of capital, 33.66%. Estimated net investment income. So this is what you're going to be taxed. You're going to be taxed 66% of the dividends that you're going to be getting will be taxed as income. So if you go here under XDTE and you click on this from February 20th, this latest form, it's going to come up. And this tells you that estimated return of capital was 100%. So you won't be taxed on this, which is amazing. All right, so let's stop talking about the boring stuff. I know taxes are boring and taxes are around the corner, but this is very important, something to consider. Okay, again, shout out to Oracle for covering this recently. All right, so let's talk about performance, and this is what's really important. So I'm using, and this is TradingView, pretty cool, free software that you can utilize to do some comparisons. So on this charts, we have SPY, which is just the index for our S&P 500. We have XDTE, and then we have our YMAG, okay? So, and we're going to start with the beginning and inception of these funds, March 20th, 2024. So it's going to be almost a year. And as you can see, this is the way that the funds have been moving. Now, obviously, SPY has been up, XDT down 7%, YMAG down 14.36%. Now, if we click this little button here, the story is about to change. So this button here, this adjusts data for dividends. So this is going to take all the dividends that you got, and it's going to add to what the underliner was doing throughout the time. Now you can see YMAG actually comes up on top, 21.97%. XDT at 17.67, and SPY at 15.85. So, a few things to consider here, and that is the volatility of YMAG. as you can see, we had more highs, but as far as lows, I mean, relatively speaking, you are having lower lows. And with XDTE, we are tracking the index SPY. Look at that. It's perfectly tracking the SPY index, which I think is phenomenal. I really like that I'm seeing that. Now, again, YMAG doesn't track SPY, it's tracking the Magnificent Seven, so not really concerned about that. But you know, the upside, obviously, with those stocks doing so well last year, you can see how we can get ahead. Now, because you're not as diversified, there is a potential of a lower low, and you know, how's that going to impact your portfolio and where that's going to end up landing. Now, keep in mind, again, bringing back conversation around the taxes, you might be getting more, you know, dividends, but you will be taxed, obviously, on that. So is that worth, you know, the 4% or whatever difference that you're going to get? Because most likely you're going to be taxed more than 4% on the dividends that you're receiving. So that's something to keep in mind. Now, again, I don't want to steer you one way or another. This isn't financial advice, but I want to see your comments. What do you think makes more sense to go longer term? Are you in camp yieldmax? Do you like the YMAG and the YMAXs? Or do you like the roundhill funds, XDT, QDT? I'll do a separate video comparing QDT to YMAX and see how that is performing. But really, I mean, these funds are going head to head. And one thing, you know, to note there on the erosion, if we take out the dividends, as you can see, YMAG, you know, lost twice as much of its value over this 1 year period. So that's something to keep in mind as this fund will continue to drop in its value. And what is that going to do to your initial investments, and if you're concerned about that. So let me know what you think in the comments. What makes sense to you the most? Do you want to be investing a little bit and getting more dividends, or you're looking for more something that is more tax savvy and does a better job tracking a larger pool of funds like the S&P 500. So thanks for watching. Glad you found this channel. Please give me a thumbs up, subscribe if you haven't yet, and we'll see you on the next video, folks. This has been a pleasure. The channel's been growing. I've been getting more interactions, so glad this is gonna continue to move on. We're gonna continue to do weekly videos of the performance of my funds and see how they play out and what's gonna happen next. Thank you, folks. Have a good one.